Hi, welcome to Vijay View. Today, let's review Bajaj Finance Q3 numbers. Generally, they are the market darlings and they do post a good set of numbers. The valuations are at peak, but still investors are willing to pay a higher valuation for the current valuation and accumulate this particular stock. So let's see how this Q3 internals look like. Yes, it is a stellar set of numbers. And let's see how they did manage to grow such a consistent set of numbers. And let's see how the internals look like. Basically, the overall AUM growth came at 26% year on year and 9% Q on Q. Their growth was across segment except auto financing, which degrew. The consumer finance grew at 19%. Rural gained 37%, SME segment gained 23%, commercial financing segment gained 57%, and mortgage grew at 24%. The management expect that AUM to maintain its strong growth trajectory even for the coming quarters until otherwise there is any COVID related disruptions. And yes, financial sector is very sensitive to COVID related issues. If any small lockdown scenario arises, then the first sector to panic is the banking and the financials. So that is one of the key risks. And despite that, this company has posted a good set of numbers. Their NIM is around 10.9. When compared to previous year, they were posting around 9.6, but this time they're posting around 10.9. The NII growth, that is the net interest income, grew at 41% year on year, and they're growing at a healthy 40% growth across quarters. Their liquidity right now stands at 14,400 crore, but the management has also indicated that the only 11,000 crore they'll be maintaining it in the next quarter, and so which should push up the net interest margin because the remaining 3,400 crore is going to be utilized. And when it comes to the OPEX, they did a good job. They do maintain a good operational ratios. Their asset quality, the NPAs dipped 72 basis points Q on Q to 1.73, and their net NPA declined by the 32 basis points to 0.78. And to notice, the asset quality is now back to pre-COVID levels, that is nearly before 2020 levels and not prior that. The guidance for the provision is the company has said that they are increasing their around to 4,000 to 5,000 crore because of the third wave. And other management commentary which the company has given is that regarding the strategic moves there's some digital transformation. This is phase 2 which is likely to be rolled out. The phase 1 is complete, and this phase 2 does have some interesting digital data sets which will be released by the company in coming 2-3 quarters, and they are like the agreements, the OTP authentication, the point of sale, all will be done through their app from 1st Feb for both new and the existing customers. They have a lot of responsive units, a lot of touch points, so they are expecting data from all these also to be rolled out so that they can have a very clear view of what the finance is being put into, that is the financing of Bajaj is being put into, which can reveal the spend patterns. So there is another ecosystem which is actually being developed by this Bajaj Finserv. It is a good trend. Let's see how this actually pans out. Then the BFL will be launching two-wheeler financing for non-captive customers in June. They are mainly postponing this because that has not been streamlined into a digital front. So basically, the Bajaj Finance segment would like to put themselves in a digital first so that they are able to track the entire cycle so that they do have a clear view of how that money actually functions. So that is one of the reasons why it's been pushed back by 5 months.